Hi there, welcome to Hedera Wyckoff Technical Analysis session. If you're new to my session, these are the key takeaways you'll find after this session. I'll cover both weekly and daily time frame Wyckoff stages, current and upcoming, and also key price levels where Hedera would find support or resistance. And also, I'll indicate to you any breakout timing that are shown by the charts. So let's get started with the weekly chart. Here, last week we talked about Hedera potentially dropping by 20% if it can't defend the red level. The fortunate thing for now is that it hasn't gone as bad as I mentioned, but it's halfway there. So from the key level to the point where it dropped, it was basically around 10%. And from that point, there were some buying the dip movements. Some people jumped in, and then that's where the price got to the close. And then this week, even though the beginning Hedera challenged the key level again, but then got pushed hard, really hard down to even lower than the close of last week. And as of now, it's sitting at around 16 cents 70, which is a point where there isn't much support if we look across the history. Only all the way till August 2021, that's where the 2 to 3 weeks of time the price stayed over there. So this is not, I would say, a place where the price will sit for very long. The bulls and bears will obviously try to battle around. For the bulls, they try to push it back to above the red key level. For the bears, obviously, come down to hit the white line to touch, basically to touch base with something similar to what we had back in April and June. Those two signs of weaknesses. And this time we may see a third one, like I have already put in the probability since multiple weeks ago. So this is still the big picture. The downside risk is still higher than the upside, and from the weekly chart perspective, there isn't much immediate time point for breakout. But when we get to the daily, we will see whether that's the case. And let me just change this line to align with the other charts so we know this dashed line is the center line of the long-term playground zone. So again, if you're new to this concept, the long-term playground zone basically tracks from far back in history for Hedera since 2019, about 80 to 90% of time across different coins. This zone tracks what are the actual period that the price or the coin is traded within those price range. And just to quickly check the Bollinger Band Keltner squeeze before we get to the daily chart. Here, squeeze isn't happening yet, but you see the purple lines are flattening out. And if the price continues to trade narrow range, like within the red and the white line over here, basically between 13 cents to 17 cents 60, then eventually a squeeze will form in the weekly time frame. And again, if you're new to this Bollinger Band Keltner squeeze indicator, a squeeze means a bigger price swing will follow. A squeeze can happen in just 1 week, like what we see here in July, or it can happen multiple weeks, and the magnitude of the swing differs as well. Sometimes it goes to the upside first and then swing back down. Sometimes it goes just swing one side and then take a very long accumulation or like a long squeeze period before a swing up happens. Okay, so that's the concept. Let's go to the daily chart and see what it is showing us. Bollinger Band Keltner squeeze. The squeeze happened, the swing also happened. That's an outlier event, so I'm not too concerned about that one, and we don't have something imminently happening for the squeeze in daily. However, here we can see definitely there is pressure over the past 7-8 days that Hedera hasn't been able to climb back to above the red line. The fortunate thing, however, is also over the past 7 to 8 days, it seems to be finding support around 16 cents, 20 or 30. If we extend this line to see why it is the case, so from March this year, we see this period during the accumulation cycle in the daily chart. That's where the price found support as well before it dropped all the way to the selling climax on April 4th, 7th actually, April the 7th. And then eventually it bounced up to the automatic rally range where the lows were also at this level. And fast forward to June time, where there was a couple of bounces when the price came down from the first LPSY, the last point of supply. One bounce around end of May, and then second during the end of the first week of June, and eventually this candlestick on June 12th. Those three bounces also confirm that there is an intermediate support level, and eventually this sign of strength and backup and last point of support period during early July. So all these 3 to 4 time intervals provided this intermediate support level for the time since October 10th all the way till now, for almost 3 weeks now. Okay, well actually just 2 weeks, 10th to 24th. So these are the 2 key lines that we are having, and here we haven't drawn any downward trend box like the other altcoins that I have done in the past few sessions. So it's time to do it now, because this trend line, this white dashed line coming down from the upthrust all the way through those LPSYs isn't showing us any or doesn't apply if the price continues to trace within this range, unless when we get to a point where the current support level crosses that particular line. Because previously we talked about if the price continues to trade within that triangle without dropping outside of this upward trend box, then eventually there would be 2 breakout time points depending on where the price was trading. One was beginning of November, the other was middle of November. And now, since the price has got to this range, there are 2 other time points which are further down the timeline if that trend line still applies. However, more important or more imminent is the rate of price decline seems to have changed. So previously it was around a range roughly like this. Okay, that's the approximate slope or the rate of decline. Now we have to adjust not this line but the box, this channel, downward channel, because of what has changed by the October 10th event. So we need to expand the box so to include the wicks as well, excluding the October 10th. That's like I said, a black swan or an outlier event. You don't want that to skew your charts or your drawings. That's the rate of change now. So just to check, now we have the box, we can take away this line because the top edge or the ceiling of this downward channel basically act as or have the same effect as that line. Okay, Now, one more line, the center line of this box. It doesn't have to cut the box exactly into half. If you have heard or have seen my previous sessions how I draw this and explain this, basically this line has to cut through the most candlesticks, head or tails, not the center of the body. So there are a bunch of head and tails in the beginning over here, and then a couple here, and eventually this bunch here, here, and here, the LPSY. Then this is where the center line should sit. Okay, it doesn't cut the box into 50-50. Always, not always cut that into 50-50. Now, why this line and what's the importance? You see here, the previous few days, when the price passes through the red key level, eventually the wicks, meaning the price has reached the center line and then got rejected. So in addition to the key levels, these trend boxes and their center lines provide an additional indication to us where are the potential bouncing points, either like to the upside or to the downside, where it finds resistance or support. So here there is a little triangle that the price is heading towards. Not that it has very strong indication, because even if I tell you that the price is going to break outside of this triangle by middle of November, there isn't much that's very key other than the fact that it may possibly break above the red key level. However, the more important thing is the price hasn't broken outside of this downward channel box. Whether it's going to break to outside of this triangle to the upside or to the downside, it's still within this downward trend, which we already know it is in since it's dropped from late July. It has been following this downtrend for 3 months. And also we talked about the likelihood of getting the price getting to a selling climax, similar level to June 22nd and April the 8th. It's of a higher probability. If you are into candlestick pattern analysis, this is also a descending triangle. Okay, if the price continues to trade coming down to this narrow range, there is actually a steeper line over here. Let me change the color just to make it easier for you to see. Yeah, not many colors, I know. Maybe let's use white. So this October 29th, or maybe not, let's adjust two words just to make sure the wicks are included without like getting outside of the line. So here you see these two wicks essentially coming down towards this point somewhere around October 30th. There's actually the descending triangle, but you know, I've already mentioned it doesn't matter because everything we can draw here is still within this bigger downward channel box. So just to illustrate to you what we can draw, not that it matters much because we already know the bigger picture or the context of where the price is trying to get to. And no change to this probability, where it's going to come up back to between the yellow and green key level, 25 cents to 29 cents, is still of a lower probability as of now. Volume itself, it's been pretty consistent across since late July. Again, the downtrend, when the downtrend started. So that's pretty much for Hedera. The trend still continues. So if you are trying to dollar cost average or jump in at this moment, be careful, because if it is really coming down for an accumulation like what we have seen here between 2022 all the way to late 2024, we are still not at that level yet. So one interesting thing I forgot to mention is that this period over here, before the this, let's say, major peak during December 2024, was that the low, or the lowest point, was actually in November 2024. And interestingly, we are getting into that period now. So would we see a low point at similar time to what we had last year? We will soon find out in just